Stock market today analysis for Friday, December 16th, 2022. Let's read this. I have been telling you for a while, this is not grandpa's stock market anymore. Stocks are not moving up and down because of their profitable companies, they're good companies. They're moving up and down because of what the Fed is doing. The brutal selling in stocks continue today as Mr. Market threw another fit over hawkish language from the Fed, indicating that the central bank remains committed to keeping interest rates elevated. No sign of the money printer returning anytime soon. What that basically is saying is hawkish means interest rates going up, making it a little bit harder to get money. Harder, not like, hey, this is difficult to do, more like harder based on you deserve it a little more maybe, but make money more expensive versus dovish, which is having lower rates. These lower rates allow money to be taken and funneled into the stock market, and that over maybe since about 2008, the easy access to money has went into the stock market and caused stuff like this. That's not because of fundamentally strong companies with good earnings right here. That's because of things like quantitative easing, Operation Twist, low interest rates. People borrow money, people buy stocks, not just people like you and I, but companies borrow money, they take their company, buy back their own stocks. I don't know, all types of like little shenanigans going on. And so again, the Fed is coming out saying that they're gonna keep raising rates, but they're not necessarily going to raise them as fast, but they're going to keep raising them. And the stock market sells off on that type of news because the stock market needs this. Stock market isn't going soaring up like this based on fundamentals. It's based on the easy money. When the easy money's gone, look what happens. Now, how does that matter? Well, it depends. It depends on if you're a 401k person, if the only thing you know how to do is buy a stock low and sell it high, tough, right? Hard to buy here and sell high when it's down here. But if you are going to be selling cash secured puts on stocks that you don't mind owning potentially the rest of your life to pay you a dividend, and then you can turn around and sell covered call options against them, in that case, you might just be getting better deals. So it all depends on perspective. If your skill set is really limited, there's three ways a stock can go: up, down, and sideways, right? Look at right here, right there. Basically went sideways during that time. There's three ways a stock can go. If you only know how to make money when a stock goes one direction, and I know how to make money when a stock goes in all three different directions, then you're missing something, right? You're showing up to the game, and you only know how to play 1/3 of it, where other people know how to play 100% of it. So you decide what you want to do. If you want to learn how to play more of it, then look in the description below this video. There'll be a link to ihavesuccess.com. Go check that out. Also, right here at the 4-minute and 10-second right now, it just popped up right there. Check out that video. Watch that video. Watch the other videos that suggest. Take action on those other resources and put yourself in a position where you don't have to be dependent on what whoever's running the Fed decides to do or not do. And the only way you can make money in the market is when it's going up. Speaking of the markets, let's take a look at them. So here's a general overview of basically all the big markets that I watch in the US. The dollar pushing up against this 200-day moving average. Now, let's keep in mind, these little squares, we're seeing from these green candles, we're seeing 1 month of data, right? So there should be about 30 30 candles in there. Doesn't mean that it started exactly at the beginning of, you know, a certain time period, but we should be seeing about 30 different candles. And this moving average is a 200-day moving average. 200 days divided by 20 trading days per month equals 10 months. So we're looking at kind of like, you could say 1 day of data, 30 days of data, 200 days of data. Over 200 days, it's been going up. It dropped down. This is a big support resistance line. Can act as a big support resistance line. It's definitely what it 100% is a long-term trend. So, or a longer-term trend. We see it's been going up, and a lot of times, look at it took a while for it to crash through. When it crashed through, we'll see. Is it gonna break back up above? TLT, which is 20-year bonds. We see what that 200-day has been doing, sloping down over a little more over half the month, a little more than half the month. It rallied up. Now it's kind of moving sideways. Gold has been just going in a channel along this 200-day moving average. Oil is looking like we're just going to keep going lower. It couldn't get higher than this pivot point. So our at least our month-long trend of a downward market is still in place. Now, looking at a bigger picture, maybe we would see a different trend. But from what we're seeing right here, high, lower high, lower high, low, lower low. Bitcoin, this is the futures, 200-day moving average, sloping down and basically moving sideways. Since I've been making this videos, this is what Bitcoin has been doing for quite a while, and so I would expect that it's probably going to be testing back here on the 1600 mark. Now the VIX, which is kind of thought of as the fear indicator, volatility index, fear indicator, we see that it dropped down today. So for some reason, even though stocks are moving down, it's been kind of goofy. Even usually it's like stocks down, VIX up, stocks up, VIX down. But it's stocks down across the board. The 4 major indices here, down, down, down. Oh, that one, sorry about that. We got a little pop up here. But for some reason, the VIX is moving down on that. So as people feeling less fear as these indices move down. I don't know, the other day it was like they were in lockstep. I think it might have been, where was it? 3 days ago. Right here. Right here. It's like all the markets moving down, so is the VIX. And it might have been this day where everything was up, so is the VIX. Let's take a quick look at the different sectors on a daily chart. Where are we at? Real quick look. Oh, technology. You see that 200-day down. Healthcare was in this uptrend, broke that. Really just right here where I was waiting to see what was going to happen at this pivot point. I talked about that yesterday. Boom, broke that. Even going down to this. Maybe, I don't know, you want to consider that like a minor support on this little pivot, major support. I'm getting this from the Master Trader thing. You can check that out. I forget which one they call that, but it just violated seemingly both of those. Might start building sideways. We'll see, but it's definitely not an uptrend anymore. Financials dropped down past the 200-day moving average. Dropped down, rallied up a little bit today. Industrials really just got sideways, right? Here it was about 29 days ago. Here it is again. Same thing here, right? So our markets either breaking down or gonna go sideways. Energy continuing to move down, which is what we saw with oil, right? And consumer discretionary was kind of moving sideways. Now it's looks like it might start a downward trend. Consumer staples was moving up, was moving sideways, now seems to be dropping down. It's kind of past this little range it was making. Way back here again, getting close to this 200-day moving average, which doesn't surprise me. Look how flat that 200-day is. This one is almost flat too with utilities, but slowly, slightly up. Utilities really dropped down the last couple days. Real estate, same thing, dropped, kind of breaking this, seemed to be holding support right around 38, but broke it over here this day, rallied up, broke it this day, really sunk down. But you could say moving sideways, but just on a lower range now. Retail really started coming. It was like slowly sloping down and really boom, kind of taking that hard slope down. The line chart on the S&P or SPY, we see that even though this might not be the greatest trend channel ever drawn, known to man or woman or whatever your pronoun is, it's a fairly decent one. And the real point of it is like here, roughly the bear rally started around end of last year, beginning of this year, sometime in between those dates, which is pretty much close to the beginning of the year. And we see it rally down or drop down, kind of rallied up, failed, really rallied up, test that top part of the trend channel, and just kind of dropped down hard, rallied up and test this bottom part. That's how we know it's right here and here, touching those bases. That's how we know it was here. And then did it again, right? Rallied up, but look at this right here. This point in here comes back. See right in there. This point. Let me do this. Right. See how it touched here, touched there. It's kind of close to there, close to there. Even when we drop it down, it's like here, 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 here. So one thing that I think could possibly happen, I think we could see some volatility bouncing back. Like maybe it's going to hit some support right somewhere around this area, maybe rally back up. We'll see if it takes out this high, but this might act as resistance to the upside. Maybe this will act as some support. If it takes out, which overall, I'm thinking it's more a sideways trend to down, unless they're going to start doing some sort of financial rigging again and to get it go up, which I think they totally could. So that could possibly happen. But without that happening, which is not happening right now, without that happening, we might go in a sideways grind out. Or if it breaks through this support right here, then we'll have to see what happens down here. But if it breaks through this, which is end up being around 357 or somewhere in there, double bottom there. If it breaks that, then who knows where it might go, all the way down here, like 330, high 320s. We'll see, but it even could potentially come back and test all this stuff. We have to wait and see what happens. See if they're gonna do some engineering to push the market up, or if they don't do that, then what's going to happen? Is it going to grind sideways, or is it going to start breaking back down into this channel and then break that support and just kind of head down like that somehow? So what can you do with all this turmoil? The first thing you could do is you could paper trade. And what can you paper trade? You can paper trade selling cash secured put options on stocks that you don't mind owning the rest of your life. Pick a dividend stock. This will help you select a stock. The playlist, the link at whatever it was, 4 minutes or whatever it was in the video, that'll help you understand how to set up your stock charts, how to select a stock using Yahoo Finance free screener. Use this information, stock cash secured put stock selection guide. Use this 3 stocks that I sell put options on. It's not a recommendation. It's just 3 stocks that are suitable for me. They're probably not suitable for you, but they're suitable for me, and you can learn why I like them. And that in combination with this, plus using that stock screener from Yahoo Finance, you can be able to find stocks that are suitable for you. Download these other things too. Paper trade, and Sunday we'll be coming out a video. We'll go more in depth of into looking at the weekly, monthly chart, weekly charts of these different sectors of the stock market and the different drivers of the stock market. So you guys have a fantastic night. I hope you enjoy your Friday, your Saturday, your Sunday, your Monday, your Tuesday, your Wednesday, your Thursday, whatever day you're watching this. It's Friday for me, so it's time for me to enjoy Friday. You have a fantastic night. Bye-bye.